Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets hidden in plain sight within corporate filings. Today, we're diving into a report that shows how a company is securing big bucks for its future plans. And well, let's just say this isn't going to be your average borrowing story. Before we jump in, if you find value in these analyses, make sure you are subscribed. Also, we have a fantastic community on Discord, linked in the description below, where we discuss these filings and more even deeper. Alright, let's get straight to it. This filing is all about a company, CenterPoint Energy Resources Corp, or CERC for short, getting ready to borrow a hefty sum of money. The earliest event reported here is the 16th of January 2026, which tells us what they were doing right at the start of the year. Now, CERC is a Delaware corporation, and they're involved in some pretty important business, which we'll get to. Their main address is in Houston, Texas, and their main phone number is 713-200-71111. But honestly, the details of where they are less important than what they are doing. It is worth noting that CERC has some debt already out there, like these senior notes due in 2037. These are essentially promises to pay back borrowed money with interest over a long period. The core of this report, the really exciting part, is something called a material definitive agreement. Think of this as a big official deal that could significantly impact the company. In this case, on the 16th of January 2026, CERC entered into a $800 million delayed draw term loan agreement. That is a lot of money. A delayed draw term loan means they can borrow this money over time. Not all at once, they can borrow up to $800 million by the 30th of March 2026 in up to 3 separate borrows. If they don't use it all, the ability to borrow expires on the 31st of March 2026. They're planning to use this cash for general corporate purposes. That is a fancy way of saying they have broad plans for this money. Not tied to one specific project, the loan itself needs to be paid back by the 16th of July 2027. Now, let's talk about the cost of this money. The interest on these borrowings can go one of two ways. It can be based on something called term SOFR, which is a benchmark interest rate, plus an extra 0.85%. Or it can be based on the alternate base rate, essentially. They have some flexibility in how the interest is calculated, which is good for managing costs. This agreement also doesn't just give them money, it comes with rules. There are certain covenants which are like promises the company makes. One key promise is to keep their debt levels in check compared to their overall capitalization, which is basically their total assets minus their liabilities. This is a standard way for lenders to protect themselves, ensuring the company doesn't take on too much debt that it can't handle. Who is providing this massive loan? It's a group of banks, including the Toronto Dominion Bank, PNC Bank, and the Bank of Nova Scotia. These are all big names in finance, and it is common for large companies to get loans from multiple institutions. The report also mentions that these banks and their affiliates have a history of doing other business with CERC, like providing banking and investment services. This is typical. Banks often lend to companies they already have relationships with. The actual full agreement is filed as Exhibit 10.1. This summary is just a brief overview, and the actual document contains all the nitty-gritty details. This next section, Item 2.03, basically tells us that this new loan is a direct financial obligation of the company. This means it is a formal debt that appears on their books. The information here is essentially just pointing back to the details we've already discussed in Item 1.01. Finally, we have Item 9.01, which is about financial statements and exhibits. This is where they list all the supporting documents for the report. Here is the official list of exhibits. Exhibit 10.1 is indeed the term loan agreement we've been talking about. Then there is Exhibit 104, which is the interactive data file for the cover page. This is essentially for digital systems to read the report easily. And finally, the report is signed by Christy L. Colvin, who is the Senior Vice President and Chief Accounting Officer. This signature confirms that the company is officially submitting this report. Now, let's look at the bigger picture. CenterPoint Energy Resources Corp is securing a substantial amount of funding, $800 million, which is a strong signal of their plans for growth or expansion, or perhaps to refinance existing debt. The fact that they can secure such a large loan, and the terms are described as customary, suggests they are in a relatively stable financial position, the interest rate structure. Allowing them to choose between term SOFR and an alternate base rate gives them some control over financing costs, which is smart financial management. However, the covenants, especially the one about debt to capitalization, are important. While standard, it means they have a financial ceiling they cannot cross. If their business falters, this could become a restrictive covenant. The maturity date of July 2027 is relatively short for such a large loan, meaning they will need to either repay it quickly or refinance it again relatively soon. This also indicates a potential short-term need for funds. Overall, CERC seems to be proactively managing its financial resources. They are securing capital for corporate needs. which can be a good sign for investors if these funds are used for productive purposes that generate returns. The key risk here is always in the execution. How effectively will they deploy this $800 million? If they use it for profitable ventures, this loan could fuel significant growth. If not, it simply becomes a larger debt burden. What is your take on this sizable loan? Does it signal confidence in CERC's future, or are there hidden risks we should be watching? Let me know your thoughts in the comments below. If you found this breakdown helpful, please hit that like button, subscribe for more deep dives into corporate finance, and don't forget to join our Discord community in the description for more exclusive content and discussions. And see you next time.